Over this morning is the question, is China in recession? We have a couple of articles off of zerohedge.com. We'll discuss what's going on over in China. We'll discuss the Federal Reserve's actions yesterday. We'll discuss some of the price action we saw out of the markets yesterday, as well as what we're seeing this morning. So let's get to a question that I was asked about Sober October yesterday, and the question was it very difficult to do? And really, no. I have to say no. Half the times you go into things and you think that they're going to be worse than what one might expect, but once you're into it, it's really, you don't think much about it. The carbs probably the hardest thing to deal with, because carbs are in everything. When it comes down to having a cocktail on a Friday, Saturday night, do I miss that? Sure, no doubt about it, but no big deal, honestly. I feel really, really good overall. The body's been detoxed. I've been going to the gym. I'm like 2 ounces away, literally, actually 3 ounces away from my goal for the month anyway. So I'm probably going to head to the gym in a short while. I'm going to keep this short. I'm going to stay on the elliptical for about twice the average and sweat it off and come back, reweigh, and hopefully I'll hit that price target. That price target. It's bad. I meant weight target. The markets have totally skewed me in terms of many things. So let me type this into good morning all. Into the chat box. I see we have people on from Facebook. We have people on from YouTube. Let's see what's going on over on Twitter. And then we will begin. I think we're going to go probably until around 5:30 this morning, depending upon Q&A. And we are live on Twitter. Good morning, everybody on Twitter. And we'll check back in with Twitter in a moment. All right, so Sober October. Good morning. Do you pronounce your name Lou TS or Low TS? First one or second one? Just type in one or two. Where you from, please? So what I want to do is let's skip over the futures for a moment. We can come back to this. We'll wrap up with it. What I want to do is I want to talk about the Singapore. You know what? You told me that before. You've told me that before. Sorry about that. Yep. What time is it there? I love the fact we have a global audience. I really think that's fascinating to me. And I love when I have opinion about Brexit and what's going on over in Europe, and I get comments from the man on the street, and you break through that filter of the media. 5 p.m. Okay. All right. Happy hour. Good for you. Welcome. Okay. So what I want to do is I want to talk about China. And you being in Singapore, you may have an opinion on this. So please chime in if you do. Whether or not you're seeing any ripple effects in Singapore with regards to what's going on over in China. And I want to kick things off with, this is an important number. This is the Purchasing Managers Index for China. Chinese PMI slide further into contraction, just shy of post-crisis lows. So China is slowing, and slowing rapidly. We have the China manufacturing PMI. Any number below 50 is a sign of contraction, not growth, contraction. Not stalling, but contraction. And we have Chinese manufacturing, which went into a contraction this past month, just shy of the 50 mark, but still, it has a foothold in the contraction arena. And the Chinese Non-manufacturing, meaning the services sector, is still in growth phase, but you could see by these line charts, blue being services, red being manufacturing, that we are rolling over here, and it is not a pretty picture for both sectors. We're putting in lower highs and lower lows. If you're not a technician, that's all you need to see. It's all you need to know. Lower highs, lower lows, bad, right? So this is not good. And, you know, China is so large now. They're the second largest economy in the world. Singapore's stock market is rallying. Okay? Any idea why? Is it organic growth or manipulated engineering of the stock market like we have here? Singapore is an important country. For those that are not familiar, that's why I spend so much time talking about Singapore. It's a very, very developed country for those that don't know it. And a very good country at that. So moving on. So here is production. We have broken down by components. Almost every index posted a decline with the exception of the worst one, employment, which posted a modest increase. So production dropped to 50.8, down from 52.3. Big drop. New orders, contraction, 49.6, down from 50.5. Employment grew by a couple of basis points. And let's not forget, the CCP, the Chinese Communist Party, is not going to let, if they can help it, they're not going to let companies lay off people because their biggest concern is riots in the street. So they will keep people employed. That's going to be the last segment of their economy to roll over. Now, the other article here is that the Chinese have a deluge. Let's go to the chart. A deluge of short-term debt to roll over. A lot of it. This is all their local government bonds maturing in 2020. Right, so there's a ton of bonds that need to be refinanced. Now, here's the problem. And this is not just China. I'm not picking on China. This goes for the United States as well. It goes for Europe as well. This is going to, and it goes for the U.S. consumer as well. All of these credit cards out there with the teaser rates, you're getting 0%, spot 99%, going out 1-2 years. That's all fine and dandy. But what happens when the time comes and yields are surging and you can't roll over that debt anymore? You can't get that 0% financing for another 6 months, a year, whatever it is out there. I'm not exactly sure. But I know the practice is out there. What happens when you have to pay the prevailing rate on the credit card debt that not everyone, a lot of people, most Americans are building up on their balance sheets? What happens when you can't refinance that debt? You're paying between 17 at the low end and 25% at the high end on that credit card debt. You're going to see bankruptcies galore. Hey, RL, good morning. Sam, good morning. So this is not just a Chinese thing. This is just a microcosm of what we have coming to a theater near us. The rolling over of debt. China is seeing it now in their municipalities when they're attempting to roll over their debt. So they have a tidal wave of debt which is rising that needs to get rolled over. And when you take a look at their bond yields, this is their 10-year government bond. It's rising and rising dramatically and nearing, if I had a crayon, I'd be able to draw this out. It's nearing the upper band of resistance. We'll see whether or not we break out on that 10-year yield. But if we begin to break out, that's a major problem for the Chinese to be able to roll over that new debt. Yes, Sam, yesterday at 2:30 was a huge day on Euro. I was long. Good for you. Yeah, I think that trade, Euro, I'm assuming Euro versus USD is going to be a good one. I think that the dollar is done, at least in the short term. Before we get to the charts, this is coming out of Europe, Sam. This is from VW, and this really goes back to the comments I made over the weekend, or it was a Monday, or actually Tuesday, on Swing Trading Today with regards to the fact that we have a recession in the used car market. We have a lot of people not able to make their payments. You have record numbers of people that are 90 days delinquent on their auto loans. It far exceeds the number of people that were delinquent on their auto loans during the bubble, the financial crisis. Well exceeds it. And here you have an article off of ZeroHedge.com again. Global Carmageddon continues. Pirelli and VW warn about worsening market scenario. I don't know if they have any charts here. I didn't look down that far. But this is a warning out of VW, one of the world's largest car makers, if not the largest car maker out there. A lot of people don't know that. That's how big they are. That they are having problems. The only area they're not having problems in is South America. So the headlines, while not immediately dire for the markets, you're seeing the momentum build. There are a lot of problems out there in the global economy, not just the U.S. economy, not just the Chinese economy, but globally. A lot of storm clouds building out there, and we need to pay heed. So in the short term, we're going to talk about the short-term price action on the futures. But longer term with members, we're going to be talking about our strategy. How do we adjust our strategy to adapt to the coming onslaught of just really bad news for the markets, and how do we plan on profiting from it? In the short term, we plan on continuing to build on our gold mining position, on our silver position. I'll be sending out alerts to members on that and guiding them through on live streams tonight. We have one tonight, post Thursday night stock market live. So join us there tonight. If you're not currently a member, everybody joins in. But after that, we're going to be rolling over into a strategy session with members to talk about the week's events, how we plan on adjusting our portfolio based upon the weekly price action for the coming week. And join us there, okay? So let's go on. Oh, going back to strategy for a session. So what we're also going to be watching for is emerging markets. While emerging markets are going to rally with the market, they're also going to roll over with the market. And once we see a bottom in the stock market begin to build, we're never going to know actually when that bottom is reached. But as we begin to see a trough getting built, we're going to begin to buy emerging markets first. There's a saying, from the ashes rises a phoenix. And I think the first phoenix to rise out of the ashes of the sell-off is going to be emerging markets. So we'll be looking to build a position, aggressive position, not now, but in the future on emerging markets. So more to come on that with members. Sam, Fiat, you fuse the Peugeot outlook on the chart. I'm not sure that Fiat fused the Peugeot. So their outlook was not good, or was that bad, Sam? Okay, I'll wait for Sam to answer on that. So he's got some news out of the auto sector over. Sam is in Italy, for those that are not aware. And I always want to know the man on the street's opinion. It's good. Okay, so good news out of there. Okay, good. Good stuff. All right, thanks, Sam. Appreciate that. All right. Let's get to the pre-market action. All right, so big action here. This just started. We are 14 minutes into this 4-hour bar here. And you could see that we are surging on the 10-year Treasury bond price. Not the yield, but the price. Yields are dropping, bonds are rallying. So this is very, very bullish for pretty much everything. Because yields are dropping. You should see retail do fairly well here. Declining yields will allow people to go more into debt. So short-term view of the bond price. Let's go to a 2-year, see if we're getting similar price. Yeah, we're breaking out here. So we are on a short-term basis beginning to break out on not just the longer-term 10-year, but on the shorter-term 2-year. So the entire spectrum of the bond market appears to be rallying this morning, which is fairly bullish, very bullish, not fairly bullish. Now, what I want to talk about a little bit in further detail is the dollar. This is not going to be bullish for the dollar. The dollar is dropping. You saw yesterday, as a matter of fact, I want to talk about this. Yesterday morning, I spoke about this bar here, the breakdown on the US dollar. And I said, expect a rally and an attempt to recapture prior support. You see this more often than not on a breakdown. And it's a great way to enter a short trade. Why? It's because, what if you're wrong? 50% of the time, let's say that you're wrong. You want to keep those losses small when you're wrong. So how do you keep your losses small on a short trade? And this goes for a long trade as well. When you see a rally back on a short trade, when you see a rally back and an attempt to recapture support, you enter your short with an opening position. If you wanted to go shorting 1,000 shares of UUP, which is the dollar bull ETF, you don't go shorting 1,000 shares at one shot. Short 250 here on the attempted recapture of this support level. If we hold it, if we close on a 4-hour basis above it, we pull back and retest and continue to rally, well, then you are wrong. Stop out. Get out. However, here on this recapture or attempted recapture and the pullback, I would have leaned into the short position, adding more. Then you can see this next bar, we attempted yet again. I probably wouldn't have added more here because they were trying to build momentum here. I actually already drew a line here. They tried to build momentum. Here's where I would have added more. We surged on the Fed announcement. The knee-jerk reaction is generally the wrong reaction. I say this time and time again. You saw it yesterday on gold. You saw it on the dollar. Let's go to the intraday chart. Before I do that, when would I have added to this short position? On a continuation breakdown below this lower band of support. That would have had me short, even greater. When would I have stopped out? Had we closed above this upper band of resistance, which then would have been support. I would have been out, small loss, but now I would have been looking to lean into my shorts and leaning into it even further later on today, probably. I think the dollar is cooked here. Let's talk about knee-jerk reactions. Here's a 15-minute chart. So the Fed announces, what do we get? Rally in the dollar. Why? Why would the dollar rally? Because they said they were going to stop raising rates? Maybe. Why would the dollar rally? For the life of me, I can't figure out the logic. This is all algorithmic trading. I think that I keep saying this over and over again, but I think that they write the headlines now to trick the algos. That's the feeling that I get. Maybe the headline came out on CNBC, Fed pauses on rate hikes. That's the first thing they read. They bought the dollar. I don't know. I'm not that smart. But for the dollar to rally on, even on the headline news as I saw it, not as I read it, but as I interpreted it from the announcement, I didn't get a feel for a reason for the dollar to rally. They cut rates, for Christ's sakes. So why would the dollar rally? I don't get it. I just don't get it. Anyway, long story short, we sold off as it should, and we sold off very, very hard. The dollar, I think the goose is cooked here. We may get a short covering rally intraday here. Longer term, I think that we're going down. Sam, Bob, there were possibilities that the Fed will wait to cut. Yeah, but the fact of the matter is, Sam, is that think about what's been going on. You've had the Federal Reserve in the repo market pumping billions upon billions into the repo market, financing the banks. What's wrong with the banks? They're blaming it on tax implications for seasonal reasons. I'm not buying that. So they're in there bailing out the banks. They also cut reserve requirements for the banks to be so they're able to trade. So they need to keep less dollars in the banks so that they could get more leveraged up with their trading operations. Why are they doing that? They're making it easier for the banks to make money so they stay solvent. So to think that the Federal Reserve is at any point in time in the near future going to raise rates, it's ridiculous. It's absolutely ridiculous given what they're doing. And I always like to say don't listen to what they say. Look at what they do. If you do that, you're far better off because you're not drinking their Kool-Aid. Sam, so people were scared. They sold euro. I was waiting for that moment. Yeah, well, on the knee-jerk reaction, they sold euro, and that made sense. But at the end of it, the end of the day, let's go back to the 4-hour chart. Actually, let's go with the euro for a moment. So euro USD, I know I have it up here somewhere. Here's the yen. Why don't I have the euro up here? All right, so here was the knee-jerk reaction on the euro. Why would they sell the euro? I have no idea on that news. But after the fact, the news got digested, and sure enough, it was off to the races. Congratulations on the trade, Sam. Very, very, very nice price action here. And if you take a look at it, you know, it's a bit extended here. Euro versus USD on a 15-minute chart, but longer term. On the 4-hour chart, we're a bit extended here as well, Sam. We're trading above that third standard deviation Bollinger Band. You book any profits? Is this a trade to you? Short-term trade? Hey, Hick. Hi, Bob. Any thoughts on semiconductor stocks? Yeah, I can take a look at that for you. We just booked profits on the semis. We'll take a look at the SMH before we shut down here, okay? So we're a bit overbought here. I think longer term, let's go to a daily chart on Euro USD. This is a pretty setup here. I mean, what's not to like? The only thing I have to say negative about the euro, and it's really not a negative, is that we have a bit of resistance up here. We haven't made new higher highs yet. I think that we will in the coming days, not weeks, but days. You bet. Anytime, Hick. Welcome aboard. Let me check out Twitter. Let me see if I can get Twitter more engaged here. We have a bunch of viewers on Twitter. Folks, if you're watching this on Twitter, can I ask you to give a like and share with a friend? I'm trying to build my Twitter audience. If you can do that, I would really appreciate it. It helps me out quite a bit with I keep saying YouTube algorithms, the Twitter algorithms, and the folks. The same holds true on YouTube. If I could ask you to give a like, subscribe, and what am I at on YouTube? 1,569 viewers. Can you please be the 1,570th, it's not viewers, subscribers? I'm at current 1,569. Can you be 1,570, please, in terms of subscribers? I really appreciate it. And Twitch, those are the younger millennials out there. And thanks for that like on Twitter. Appreciate it. And if anybody could retweet, I'd really appreciate that as well. Thank you very, very much. Thank you. All right, so back to euro really quick. Euro is looking really good here. Let's drill down. Let's take a really close-up look at what we need to see here. And here is the line in the sand. We have resistance right up here. Right at 1.12 on the euro versus USD. Once we clear that resistance level, we're going a lot higher here on the euro, especially with this Brexit deal kicked down the road. The focus, the limelight has now moved from Europe to the United States. So while Europe has a ton of problems, they just got backburnered. Now the focus is going to come to the United States, and it's going to mean weaker U.S. dollar. Let's go to back to the 4-hour charts. Again, we're a bit overbought here intraday. Let's take a look at the, we already took a look at the dollar. Let's go back to it. We're attempting to rally here. We're probably going to rally a little bit today, but then I think we roll over again. We make new lower lows on the US dollar. If that is the case, what do we want to look at? Commodities. In particular, gold, silver, the miners. So let's take a look at gold. Gold is back above this morning, and I was up at 3:15 this morning watching gold, and that's why I'm not sucking down a ton of coffee right now and yawning as I usually do. I already drank a ton of coffee. So the price of gold is securely back above the 1,500 mark, as one would expect. We may see some weakness later on this morning on a dollar rally, but I would be a buyer here if we close out the week above the 1,500 mark on gold. We're already very, very long of the gold miners, and we plan on adding more on a continuation breakout. And the miners had just a simply outstanding day yesterday. They took the miners down. The knee-jerk reaction was negative. Sure enough, what did they do? Rally, bullish key reversal on the day. We're very close to a breakout on a weekly basis. We already have a breakout and a retest of the breakout points. Not one support level, but two support levels are retested on the gold miners. It looks as though we are breaking out on a bullish key reversal on the miners. I think that you're seeing gold validate that probability right now. So members, more to come if and when we do add more to our gold mining position and when we do open up a position on gold. Loving the setup here. Let's take a look at silver, of which we are long of. Silver moving higher here. We have some room between where we are at current and resistance. We're building a right side of a base. We already have higher lows put in here. So the path of least resistance is gaining momentum to the upside on silver. Now, thanks for the like on Twitter. Appreciate it very much. This is what I hate about doing the live stream. Hate doing that. Let's take a look at the stock market futures. S&P 500. Wow, we're down. I thought we were going to move higher here. Earlier today, I was looking at the charts. As I mentioned, I was up at 3:15. I just couldn't sleep. Oh, that's the other thing about sober October. The lack of carbs, your ability to wake up a lot earlier is a lot easier. The carbohydrates that you go to sleep with, they affect your sleep. They also affect your energy levels dramatically. Like when I go to the gym, when I have carbs, I could pump out a lot more in terms of weight, and my stamina is a lot more when I have carbs. It seems counterintuitive because it should be healthy that you don't have a ton of carbs. It's not really true. You build up your insulin levels and you're able to burn them off at the gym. It's a little bit harder when you don't have those carbs at the gym. So, but you do sleep better, and net, the effect, you're still going to the gym, you're dropping off body fat, and that's what really matters. So, and you're building muscle. So this is what I was looking at earlier, was the probability. I didn't even draw a bull flag setup here. I expected that we would bull flag out here and then begin to break out on the day, given the fact that the Federal Reserve is, for all intents and purposes, the best friend of the stock market right now. They don't want to say it, but their mandate is no longer, they don't care about you, me, they don't give a rat's you know what. None of these central bankers do. They care about not the 1%, they care about the spot 1%. That's all they care about, and their own jobs. So let's not get wrapped up with the culture war here. This is all about the spot 1%, the very, very mega wealthy getting all the more mega wealthy. And this bull flag setup is not panning out at current. I mean, this bar opened up here at 5 a.m. It may not close where it is at current. We may just rally back. We may break out. This bar closes at 9 a.m. Eastern Standard Time. We'll see what happens, but I won't lie to you. It's a bit concerning where I long of the S&P 500. We book profits on the S&P 500, our leveraged ETF. So we're no longer long of the market, with the exception of one trade, and that is Angie's List. And let's watch and see how we close out this bar here. Do we break out or do we fail? And then if we fail, I would be looking for this support level here at the 30.22 spot 9.3 level to hold, because that marks support from the 30th. So we're going to want to keep an eye on this, because that will signal problems for the market, because it could be a delayed sell on the news event. Because the only reason I don't believe in saying delayed this, it's different this time, that what I don't like what the Federal Reserve does now is they had that long-winded press conference after the announcement on a Fed decision day. And that belabors the reaction by the market. You usually get that knee-jerk reaction, then you get a reaction in the inverse direction of which the market traded. But that press conference skews it. So you may be seeing, and this is speculation, I'm not predicting this. What you may be seeing here is a breakdown on a selling of the news event out of the Federal Reserve. But we could quite possibly rally back here. I don't want to belabor this all too much. We're talking about only a 4-hour candlestick here, which isn't even closed, but we're weakening up here by about a third of a percentage point on the S&P 500. Here's that bull flag setup on a 30-minute chart. We broke support here. We're testing support, or we'll test support here. So I think we're going to go lower in the short term on the S&P 500. So a little bit of a warning flag on the track this morning for Halloween. Back to the 4-hour charts. Let's take a look at the NASDAQ. Similar price action happening here. Not a bull flag setup, but we were in a consolidation. That's the only difference. And we are breaking down below support a little over a half hour into the commentary and into this bar. 30-minute chart. All right, so I'm not going to put all too much weight on a 30-minute chart. I will be looking at the 4-hour chart, though. Let's take a look at the Russell 2000. All right, it's weakening up here as well. All right, so we are weakening up here. We haven't taken out prior lows yet. So we'll be talking about tonight. Please join me tonight on, you don't have to be a member. Join me tonight on Thursday night, Stock Market Futures Live. And we'll talk about the weekly charts and how we're looking as of the close on Thursday. And it'll give us a good view how we're going to begin next week. And then on the members session afterwards, we'll talk a bit about strategy moving forward with our positions. And this is an interesting setup here this morning. We're down over almost a half percentage point on the Russell right now. So we're going to keep an eye on this market today. Let's go to the semiconductor sector. I may need to go to to TrendSpider. Let's use the SMH. And keep in mind, this is as of the close yesterday. And I'll annotate this chart for you. And folks, if you're interested in TrendSpider, use discount code CT25Z. Gets you 25% off if you want to subscribe to their services. They have a 7-day free trial offer. All right, so let's begin with a higher level view. Monthly view. Today's the last day, right? So we have a monthly breakout above resistance. What's not to like here, right? Beautiful breakout. Assuming that we close above this upper band of resistance. It probably will. Daily chart, a weekly chart. So we have a breakout on a weekly basis. We're holding that breakout. Again, one trading day left to go. The uptrend is intact. We're putting in higher lows and higher highs. No divergences on RSI. If anything, it's gaining momentum. Same holds true for the Stokes daily chart. So here's where it gets a little bit dicey. So on the 29th, we attempted to rally up and through daily resistance, and we were rejected at that resistance level. No problem. It happens. It's only a daily chart. It's not a weekly chart. It's not a monthly chart. We've cleared hurdles on both a weekly and monthly basis. That's primary concern to me. Now, when I overlay, let's go with a weekly view. We're going to overlay weekly support levels on a daily chart. This is the beauty of TrendSpider. And we have pulled back. We have support immediately below the lows of yesterday. So as long as we trade at this support level here, which is rising at the, using the semiconductor sector symbol SMH. This is what we were long of the other day, SMH. You could buy along those levels with a stop loss right above. If you don't want to buy the pullback, you're momentum trading, you're looking to buy the breakout, then you need to wait for a rally up and through the highs of the 29th, and most importantly, a close there, and ideally a retest of the daily breakout point. Now, I want to go back to a weekly chart for a moment, or was it a monthly chart actually? A monthly chart for a moment. If we begin to see this market weaken up here, the way I would play this is watch for, because remember, tomorrow's November the 1st. Watch for a pullback and a retest of the rising upper band of resistance. That is key. If you get a retest and it holds on the monthly chart, you could add to that position or open a position if you'd like. It's your choice. I can't give you guidance here. That's what I would do. I would buy on a retest of this breakout point. And you may be saying, do I have to hold until the end of November to see if it closes above that level? No, not at all. All you need to do is set your stop right below. And if you begin to break down below this lower band of support, then you defer over to your daily chart, your 4-hour chart. Are you breaking down? Judge your probabilities of a footing gaining traction, and then we begin to move up higher? Or does it appear as though we're taking out lows and the best path to take is to stop out and then wait to see whether or not we do ultimately close back above this, what would be, if you stop out, this resistance level? But at current, it is support. And ideally, it acts as support in the future. And if we close out the month back above, meaning November, back above this upper band of resistance, well, then that's game on. That is your validation. And what if you had to pay up above where you got stopped out? So what? This is the problem that a lot of traders have. They get stopped out and they're afraid of buying back in at a higher price. Why? Because of pride? Trust me, I had that. That's what I like to call stinking thinking, right? That's bad thinking. You don't worry about the price that you got it at. Worry about the trade and the fact that you're buying right. Not wrong, but right. Is your logic for entering the trade sound? The money is made on the buy, and when you should be buying is on a validation of a breakout. And you have so much, think longer term. You have no overhead supply here on the SMH. So you have limited downside risk and a ton of upside reward, assuming that the NASDAQ and the S&P 500 trades along with you. Don't bet that the semis are going to buck the market. They probably won't. They can lead the market, but if the if the NASDAQ and the S&P 500 are declining, well, then you could bet that at some point in time in the future, the semis are going to roll over as well, especially when margin calls get issued and then everything goes to hell in a handbasket. And with that, folks, hopefully I answered your question on the semis. Heck, and if I didn't, please let me know. RL, semis didn't rally much after the Fed announcement. That could be a bullish event. Let's go to these semis intraday. Let's take a look at how they acted yesterday. Yeah, so there wasn't much in terms of a knee-jerk reaction and you're right, there wasn't much in terms of a knee-jerk reaction and then a reversion to the opposite direction. It weakened up a bit, or they weakened up a bit, and they stayed fairly weak. You can see that we're catching a bid somewhat this morning, but, I mean, it's on very limited trade. Here's the 4-hour chart. They're looking good here. If the market continues to, if the market rallies back from its lows of this morning, I expect to see a continuation rally on the semis. I would like to get back involved with them. So more to come, members. Sam, by the way, Bob, read about Vatican financial problems. I wouldn't doubt that they have financial problems. I will, though. Thank you for that. Understood. Vatican Bank. Yep. All right, with that, folks, it is, and happy Halloween to you. It is at current 5:43 in the a.m. I'm going to shut it down. Thanks for joining in. Happy Halloween to everybody. For those on YouTube, please subscribe, like, share. Let's spread the word. Alternative news. And on Twitter, thanks for those likes. If I could ask for a couple of retweets, that would help me out a great deal. Leave a comment. I'll certainly get back to you. It's not just a YouTube thing. It's also Twitter, Twitch. I want to get you millennials out there involved in trading. So Twitch out there, trick or treat RL. Everybody have a profitable trading day and be well. Talk to you soon. This is my outro music. Do 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 do.